Welcome back to my weekly QQQ trade series. I have to start with a heads up. My wife, who's not only my business partner but also my rock star video editor, is off working the polls today, doing her part for democracy. So editing duty falls to me, and let's just say she's got way more skill with that than I do. On top of that, I'm nursing a bit of a cold. I actually had to cancel two students this morning at Solteraway Cottage School, which I run out of my home, one for swim lessons and one for an academic assessment. I just couldn't risk passing my cold along to those little children. That's a bit of a hit to my weekly income, but luckily, I can still make a few $100s trading options without getting anyone sick. And I'll show you how you can do the same. For anyone new here, I'm Patricia Saylor, managing partner of both Solteraway Cottage School and Saylor Financial Fundamentals. Now, here's where QQQ stands today, trading just below $487 a share, down about $13 or $15 from last week. My $486 put is slightly out of the money and needs some attention to avoid assignment, while my $497 covered call is out of the money, and I'm wishing I'd kept my strike closer to $495 last week. Today, I'm looking to add a bit more income to my retirement while keeping my germs to myself. Let's run the numbers and place some trades. Right now, QQQ is trading at 487.54, and you'll see that I have expiring today, November 1st, a cash secured put with a strike price of 486 and a covered call with a strike price of 487. The 486 put is really close to the money, and so it's going to cost me $83 or $84 to close it, and I'm going to need to make that money up when I sell the new contract for next week. Sometimes I will leave a cash secured put to expire worthless because I do have enough cash to secure a second position. But this one actually is at risk of assignment, which is why the premium is still so high to close it. So I'm not going to leave it alone. Um, I'm going to actually pay to close this one and sell a new one. So let's start by picking a strike price for the November 8th contract. If I keep the same strike price, I can receive about $650, which will give me a net credit of close to $600. Um, but if I look over here, that probability that it's going to be in the money, it's got a pretty good chance of assignment next week, and I would like to reduce my capital at risk. So let's look at some other strike prices. If I drop the strike price to 485 or even all the way down to 480, I can still get some pretty meaningful premium. So I think I'm going to drop the strike price and roll out 1 week with a new strike price of 480. And then if it goes in the money, it'll be easier to manage next week. Okay, so that filled at 383. Let's go ahead and put it on the spreadsheet. Filled at 383. Let's go ahead and put it on the spreadsheet. Now let's roll the covered call. You might recall that I was assigned to buy these shares at a price of $490. So selling them at 490 again would give me a solid profit because of all of the options income. But I've been setting strike prices above the price at which I was assigned so that I could also get some capital gains if the shares are or if the contract is assigned. So if I roll it out to next week at 495, I could bring in 477. And if I take it up to 497, I could get 394. I think I'm going to keep the same strike price I have today of $4.97, and this is a pretty good premium, especially for a 1-week roll. So let's go ahead and place that order. Okay, it filled at 4:03, so let's put it on the trade log. And there we have it. This was a really great week for this trade. If you look at the numbers, I brought in $782 or $783. I lowered the strike price of the cash secured put and kept the covered call at $4.97, which is $7 a share more than I paid for the shares. So that was some great income. And we will check back next week on November 8th and see what we're going to do next with this trade.